Hello, everyone. This is Martin. This is the Halloween edition for this week's updates. We're looking for trading opportunities for November 2nd to the 6th. And yes, I am actually doing this Halloween evening. It is Saturday evening, just after, well, very close to 9:30. All the trick or treating has been done for this, for my street, anyways. It's pretty quiet right now. All the kids gone back home and are enjoying their treats and candies with their parents. And I thought I would just get onto the computer and see what I could see for this coming week. Now, last week was kind of a trick or treat type of thing. The trading week last week, instead of the trends continuing, price reversed for many of the currency pairs, and due in part to the FOMC Fed rate decision on Wednesday, where they did not raise, where the U.S. did not raise their interest rate. A lot of the currencies are tied into the U.S. very heavily, and whatever happens with the Fed rate decisions obviously affect the currency markets. And so we're going to take a look at what happened this current week. And like I said, some of the currencies turned around again. Instead of continuing their trends, they tricked us and now are reversing back again. So instead of getting some nice treats last week, we got a trick, and we're going to see how that evolves for this coming week into trading opportunities. So we're going to start first with the Japanese U.S. Japanese pair. Normally, I end my analysis with this pair, but I always seem to run out of time. So this time I'm starting with this one. I'm going to be going backwards, and you can see last week I mentioned that we were in an uptrend. We did break the the upper trend line here. You can see right here, price did break above. And price has now come back to retest again support. We've got support with the 50, with this blue line. We've got the 50 SMA. We've got the 21, which is just above the 50. So price is just hovering around there. And I still think price is going to go a little bit higher, but we're kind of now going to be going sideways. And again, that was the trick last week. See here on this Wednesday, huge up candle after the rate decision by the U.S. Fed. Price kind of went nowhere and then down. And so again, just telling us that price is going to go sideways. The two key areas for price to continue going higher, it would have to break the 122 area right here. Also, you can see we have the 100 SMA with this dashed blue line, and we also have a key resistance area with this gray rectangle. So last week, if you would have taken a trade, and I mentioned here on the left side, watch for bullish evidence, then buy. There was the bullish evidence on the Wednesday key Fed rate decision or non-decision. And if you would have opened a trade right here, you would be down a bit. At the end of the closing week last week. However, your stop loss should have been around the 119.80 below this big white candle below the 50 SMA. That's where your stop loss. So if you're still in the trade, you don't have to close it. I kind of expect price to still kind of go higher, but if it goes lower, then you will be stopped out. And that's where the stop loss should have been placed in the first place. Okay, so the next currency pair is the US Swiss franc. Okay, here we go. US Swiss franc daily chart. And last week I said, caution, we were near resistance. So this red line, vertical line here, indicates the opening of the trading session last week. This is the candle for the Sunday, Monday. And the interesting thing is, I mentioned right here, buy above the 98.50, which was right there. Do you see that? 98.50. This candle kind of closed just above that. If you would have gotten in at the next candle, you would have done quite well. You would have gained about 98 pips. Your stop loss would have been just below this big white candle. So if you're getting in there, your stop loss is just below there, and just below the gray rectangle. So your risk to reward would have been quite good. If you got in right there, okay, you see that? If you would got in right there, your risk was only about 50 pips. You made about 99 pips or even a little bit more. So you would have gotten 2 to 1 risk to reward on that trade. Okay, so this week I'm saying that we are in an uptrend. Okay, however, price is pulling back. You can see that price is definitely pulling back. And what I've done, I've already drawn in a trend line for you. You can see this magenta trend line? Okay. I expect price to come back a little bit lower to retest the previous support area, which is this gray rectangle. And what you're looking for is one good white bullish candle to close above this downtrend line. Okay. This also, do you remember when I taught you the 28 and 21 EMA strategy? Okay, here is this orange line is the 21. This is the 8. So we're expecting price to come back down to at least retest the 8 and possibly the trend line or even down here somewhere. But we're looking for a pullback and then a breakout of the trend line. If you see one good white bullish candle, then certainly place a buy at the open of the next candle. Okay. Now we get to the US CAD. Here we go, US CAD. Again, price is pulling back, um, and we're not too sure what's going to happen here. I still kind of expect price to go higher. However, take a look. With this candle closed right here, this on the Friday, it closed below the 50. I'm sorry, below the 21. Here's the 21, and you notice the 50 right here. So the 21 is below the 50, which is setting up for possible further downside. So price may come from here all the way to retest this huge trend line, okay, that I've drawn in. And notice the trend line coincides with this support area with the gray rectangle, as well as this dash blue line, which is the 100 SMA. So there's a lot of confluence down here, and if price comes back a little bit lower, then you can look for a bullish candle to the upside. So again, looking for bullish evidence before you can trade higher. Okay, so last week, taking a look, just a quick review, I mentioned that we were in a new uptrend, and I had some check marks actually, and we did. So this was the start of the trading week here with this red line. We did go higher and closed above the 50 SMA, which is good. And the big problem was though, I said buy above the 32.10, which is right here. And if you would have done that, you would have gained some pips. If you would have stayed in the trade and not closed out, you would be in a loss position right now. Okay, so I also said buy above the 130, 120 if you're in a pullback, and that you would be in a slight loss position. However, your stop loss would be below this gray rectangle. Okay, so you're probably not stopped out yet, which is good. Price may go up higher, but just be aware of that. Okay, this week we are in a weak uptrend. Okay, and I expect some more sideways trading. Now, what we want to do is watch for a break to the downside. So I've drawn in a trend line, and remember I said the importance of trend lines. When price breaks a trend line, it may go down further to another previous support area, in this case here, or the 100 SMA, or and then may go back up to retest again and back down. So again, what we want to do is watch for a break to the downside, especially below 1,300 area. Okay, and the 21 EMA is below the 50 right now. Okay, the 21 is below the 50, so that's basically telling me that there could be possible further decline in price. Remember the caution though, watch the 100 SMA as a support. Here's the 100, okay, and it's pretty close to, like I said, this gray rectangle and this magenta. So price could come down further before going back up, and we'll just have to wait and see. Next one is the New Zealand USD. Here you go. Price basically it wasn't an uptrend, I said last week, and wait for a small pullback and then bullish evidence. So basically, uh, there was, as of the start of the trading week, what we wanted to do is wait for a pullback. It did come back down, held the 21 SMA. I'm sorry, the 21 EMA is holding as support. Price now going back up again. Not too sure where price is going really. We're kind of in a sideways chop, and really what I'm saying is buy above the 68.20, which is here. Okay. If price breaks a little bit higher, buy above the 68.20 or buy above the 69.20 if you want to be a very conservative trader, which is a much more important resistance area. Okay, so price has to close above this area before we can consider price going higher again. Okay, and the Australian USD. Okay, last week I said that we were in a weak uptrend, and in fact, price did fall quite a bit. Also on the Wednesday here with the Fed news, Fed rate news that came out, uh, price did fall quite a bit. It's now gone up on the Friday to retest, and it's gone up to the 50. Yeah, that's the 50 SMA right there. I kind of expect price to come down further. However, the 50 has to hold, and price may bounce off of that. So we'll see what happens. This one's kind of in a sideways chop. You notice that right now, the 50, this is the 50, is below the 21, and the 8 is between both the 21 and the 50, which means that we're kind of we're kind of sideways. Not sure of where the direction is going on that one, and so kind of stay away until you get further confirmation. Then we get to the British pound USD, and this is an interesting pair. It closed with a huge candle on Friday, and you can see start with the start of last week's trading week here with this red line here. Price, in fact, fell all the way down to this up to the trend line here, and then bounced off there and went all the way higher. So, for price to continue going higher, see this 21 EMA has to close, has to get above this 50, which is the blue line. So, kind of. You know, not too sure if this is going to go higher. I kind of expect it. We are in a weak uptrend, which is what I'm saying for this week. And I'm kind of saying wait for the breakout above the 155.20, which is here. So wait for price to break out above there before you can take a buy trade, or wait for a pullback to the 153.80 right back here. So I'm possibly just a wee bit of a pullback, then look for bullish evidence to again buy in again. Okay, and last week I said that price may pull back, which it did. Watch for the 21 EMA for resistance. It did. The 21 did, which is this red, did hold. So that was resistance. And then wait for a triangle breakout confirmation. Um, and it did not break out on the downside. On the upside, it's almost breaking out, but that's if you want to be on the safe side, just wait for a breakout above the 155.20. Okay, and finally we get to the Euro USD. So with this pair, just let's take a look at where it ended up on Friday. After a couple of down days here, you can see it's starting to pull back. And the first thing that you should do is draw a trend line. So in this case, here's the magenta trend line. You can see price is well below the 21. and the 50, and it's setting up for an 821 EMA trade. As long as we find one good bearish black candle that breaks the trend line, and in this case I'm saying wait for a break below the 109.58. So wait, you can take a sell trade below the 109.58 to the downside.